Firstly, you have income, right? Here's wages, interest, so here, all your S corp flow through comes from here. And that's where, most of the businesses. And then the deductions also come from here, right? Because you have business and you have a lot of expenses. And adjustment to income, that's where mostly the IRS, the IRA deductions, and that could be, huge. You can do defined benefit plan. There's many strategies there. And then itemized deduction, here you have tax, interest, you want to have your own home. And then the big one is contribution. So that's the charitable strategy we're going to use mostly through private foundation and donor advice fund, etc. Okay. And then, of course, you have the tax computation. If it's a standard deduction, or if it's higher, then you use this higher itemized deduction. Okay, then you get a taxable income, and then you get the tax before credit, and then you have credit, child tax credit, education credit, renewable energy credit, which is big for the next 10 years with the Inflation Reduction Act. You have 30% of tax credit, 30% of whatever your cost is when you install solar panels, solar water heater, etc. Okay, and then if you invest in a LLC, for example, that have a commercial level solar farm, for example, you get the same credit. It flows through to you, okay, from your LLC or partnership. So, and then whatever you have paid or withheld, if it's too much, they will refund you. Otherwise, pay. So that's how the structure works. And there are 3 strategies. The long-term strategy is to generate capital gain tax-free capital. Okay, and the short-term strategy is to take advantage of all the deductions and tax credits. And then the most creative is income shifting. You can shift to your future self, like 401k. You can shift to your children or your parents by, for example, let your parents own a home and then rent it to you, right? Or vice versa. Or you shift to your C corp, as we said. So that's where the